Good evening once again. So I think we can get started now. So every other guy can join us along the line. All right. So like I said earlier, tonight's class is going to be a wrap up. So unfortunately, due to one reason or the other, I couldn't come on board yesterday. So I said we'll be having like a combined kind of class tonight. So we're going to be rounding up tonight, and like I said earlier, um, the 1 month course or the industry specific QuickBooks comes to an end. So we'll be issuing out a certificate of participation to all the participants. Most importantly, the guys that do contribute and ask questions and all of that in classes. So by the time we are done tonight, I think I'll be sending a chat to those guys or call them up from the group, and we're going to process how we issue out the certificate of participation to them. Right. So far so good. We have actually been able to discuss about a couple of industries, and ranging from the retail down to the manufacturing and the construction, the NGO, as well as the financial service. All right. So tonight we're going to be looking at the agriculture. That is, if you find ourselves working in that particular industry, how do we undo a couple of those transactions? So it's not even about the QuickBooks alone, right? So it is about just the general usage. So if you come across, sorry, Annie baby, can you mute your audio, please? Kindly mute your audio, please. Annie baby. Shola Taiwo, can you mute your video, please, sir or ma? Okay, thank you. So Annie baby, can you mute your audio? All right. So like I said earlier on, kindly help mute your audio, please, please. So like I said earlier, we're looking at the agriculture industry, and the basic essence of this course. Like I said at the inception, that if you find yourself working in a particular industry, you need to know the uniqueness of those industries, and how do you handle those transactions, right? And it's not even about the QuickBooks alone, because you won't be using the QuickBooks everywhere you find yourself, but we just use the QuickBooks as an area of concentration. Yeah. So what we have been discussing so far is basically the general view of how do you treat some certain transaction when you find yourself in those industries. So because of the time constraint, so that is why we focused on the uniqueness in those industries, right? So tonight we'll be looking at the agriculture, and what are those uniqueness in this industry, and if you find yourself working in that particular industry, how do you handle those transactions? So most importantly, we are also looking at the uniqueness, like I said. So what are the area of uniqueness in this particular industry, and how do you deal with and treat those transactions? So I'm going to go ahead and share my screen to everybody. So I'm going to share my screen. Yeah, guys, can we all see my screen? I need to confirm that before I proceed. So if you can see my screen, just type yes from the chat box. Okay, perfect. So we all can see my screen. So that's great. So let's go ahead. So like I said earlier, we are looking at the agriculture industry, and we look at what are those uniqueness. So like we usually do, basically, we need to know, just get ourselves familiarized with some definitions and all of that. So we know quite all right that the agriculture basically is just anything that has to do with the practice of farming, right? Including your cultivation of soil, that is when you plant crops and all of that, and you rear your livestock. So generally, that those are what we refer to as agriculture. You plant crops, your crop germinates, you sell them to that is your subsistence agriculture. You sell them to the end users, right? Similarly, too, we have the area of uh, the livestock production. That's where you have the poultry, the cattle rearing. So we rear live animals, either for the purpose of keeping them for reproduction, or we rear them to be able to sell them out, right? Or to sell the proceeds we get from them, that is what they produce, we sell them out to the end user. So irrespective, it still fall under the livestock production, right? So on a broad note, in agriculture we have 6 major areas, right? So for the recent agriculture, we have 6 major areas. There's the livestock rearing, that is the poultry and the cattle, and there's the crop production, that is where you get a land, you cultivate the land, you till the land, and you do some sort of in-ground tilling and all of that, and you plant a crop there. You wait for the crop to germinate, and by the time it germinates, you start selling either as an input to be used by an agro processing company, or as a finished product. You sell that to an end user. So irrespective, the main objective here is that we sell it, right? So that is another area, that is for the crop production. And we also have the farm management. So the farm management here is like the modern agriculture, where you don't have the time, so you have to contract somebody that have experience in farming to manage your farm. So in this case, the person managing is actually not the owner. You're just in possession of the farm of somebody, and you just be entitled to a commission, or the person remunerate you based on a particular agreement. So for farm management, basically here, you're only going to recognize your the commission you earn, that is part of your own revenue, because the money you earn from managing the farm does not belong to you. It belongs to the person that you are managing on their behalf, right? Just like somebody that manage a property, which we discuss under the construction industry, right? So you manage a property for somebody. The property does not belong to you. You are just in custody of the property. You are just in possession, yeah? And you have the farm advisory. So the advisory here is just you render an advisory service to somebody. You want to go into the farming and all of that, so you just need the service of somebody that is well experienced in that area to just guide you through. So any money they pay to you as a result of that is also your own revenue. So that's also a part. Then you have the farm setup. So somebody wants to embark into the farming stuff, you need to set up the whole stuff for the person. So the person will buy the old, you be the one to set up, arrange on how you get the guys that will cultivate, the guys that will till the land, where you buy the seed, where you grow them, and all of that. So that's also one part. And you have the farm investment. So the investment here is that you have money, you really don't know how you spend the money or what you want to use it to do. So you just wanted to go into agriculture, you have somebody that is ready to do the operations and all of that. So you give the person the money by investing into the business, and the person pays you an ROI based on certain intervals, and pays back the principal as well. So on a very broad note, these are all the major areas. But the 2 key ones are the livestock production and the crop production. These are the ones we had before these other new ones: the farm management, the farm advisory, the farm setup, and the farm investment. Yeah. So basically, The farm management, the farm advisory, the farm setup, and farm investment is the service part. It's just like the consulting area of agriculture, right? So it's the service part in that industry. So everything there is about rendering service. So we are not selling anything, right? So we are rendering service, the farm management, the farm advisory, the farm setup, and the farm investment, right? While the livestock and the crop production is basically the area where you have something to sell, right? For instance, if you operate the poultry, you have eggs to sell as a product, and you also have the live animal itself to sell. So there are a series of activities in this particular industry. So we need to understand each of these activities so that we are going to know the kind of treatment. So this kind of industry is quite unique because we have few guys that are really into it here. So we can just find ourselves there anytime. So you need to understand, it's not about you finding yourself there majorly. You might also want to venture into this particular section as you owning a business that does this. So as an accountant, you need to understand the way all of this stuff works, so that by the time you get your report and all of that, you know where does this belongs to, and what do you recognize in your revenue, what do you recognize as your cost of sale, and also what do you recognize as your non-current asset and stuff, right? So that is just a brief introduction to those areas. So we are going to take them one after the other. So aside from that, we also need to understand the key facts on all these agricultural activities. So there are a series of activities we carry out in this particular industry. So you need to understand the key fact about these activities. What do they really mean? So the first one here is the livestock rearing. Alright. Now when you rear a livestock, if the intention of this livestock is for reproduction, right? So you have a cattle, the intention of you keeping this cattle is for this cattle to be able to reproduce by just mating with a female cattle or stuff, and to bear more. So this particular cattle, in your books, in this particular industry, you recognize them as a non-current biological asset. So what this means basically is that you're going to give them the same treatment as your fixed asset. That is as your property, plant, and equipment. That is your fixed asset, yeah? So if you have a livestock rearing and the intention for this livestock is for reproduction, so it means that you're going to keep those stuff for a longer term, more than a year, right? And the value of this stuff over the years will keep reducing, because I believe that when this stuff keep bearing, reproducing, the strength they have will keep coming down, and that's where the depreciation comes in, and that is how it qualifies to be a non-current asset, and you treat them as your PPE. So you have a livestock you keep, and the intention is for you to reproduce, for them to bear more. Year in, year out, they keep bearing children and all of that. So your useful life for this particular animal is going to be, from experience, how many years do you think this animal will live? Bearing in mind that this animal will keep bearing, reproducing for you over the years. So that's what you use to determine the depreciation. So because of the fact that year in, year out, as they keep reproducing, the strength, they keep getting older, and the strength, they might end up reproducing more, less rather, year in, year out. So that is where the depreciation comes in, yeah? Then two, the ones you breed for resale, right? So the reason why you are breeding them is for you to be able to resell to customers, to consumers. So those ones will be treated as an inventory. For instance, you have, aside from even their end product, like for instance, you have a fowl that you operate the poultry, and have a fowl that lay eggs. Fine. The eggs that comes out of this stuff qualifies to be an inventory because you are going to resell them, right? However, if you also have like cattle, an intention for you to have all these cattle is for them to bear more and reproduce. So when they now give birth to those children, if the intention of those children is for you to resell immediately, it becomes an inventory. But if the intention of those children is also for you to still keep, for them to keep bearing more, reproducing again, so that you increase the chain, then it becomes a non-current asset. So you need to understand all of this stuff, because that determines the way you are going to treat them on the software. Yeah. Then the third one, the one that is kept for reproduction when they are sold. For instance, you have actually been rearing a cattle for a long period, and cattle have reproduced a whole lot of other cattle and all of that, and let's say after 5 years you decide to resell. So the treatment you are going to give to that is going to be a disposal of your non-current assets. So in this case, not an inventory, because you need to remember the intention why you are keeping this stuff. So it becomes a disposal of a non-current asset. That is, if the livestock we keep for reproduction is being sold after so many years, where this particular stuff actually reproduce a whole lot of stuff, and the result you get from the reproduction, you have sold them out, right? Then 4, for the crop production, your crop production, basically everything is going to be your cost of sale, because it's the cost of sale, because all of these costs you incur on production, like we have 3 categories. There's the in-ground, there's the tillaging, and there's the harvesting. For the in-ground, it's just that you're just getting started. You have a land you want to use to plant the crops. You have to cultivate the land here, and after clearing the land, you go ahead and till the land, and you get the seed, you plant the seed. So all of these costs you incur here, everything here is a cost of sale, because they are cost of sale because you incur this cost for you to be able to make a sale, which is the harvest, right? That is when all of these crops becomes, or all of these this particular crop germinates, so you harvest them and you start selling. Yeah. And so your crop production is 3 categories. There's the in-ground, there's the tillaging, and there's the harvesting. So for the tillaging, now from planting to maturity, you weed, you prune, and all of that. So all the activities related to crop production, all the costs you incur in producing a particular product, which is your harvest here, everything qualifies to be your cost of sale, right? Then the major fixed asset we have in this area are your farmhouse. That is the building for where your farm is and all of that. The pens, the vehicles you use to take the product from the finished product from the farmhouse to the market where you sell them. Your machineries, what you use in cultivating, what you use in tilling the ground, and the farm tools. We have gone modern now. It qualifies. These are the fixed assets because it meet up with the criteria. You use them for more than 1 year, and these are the stuff you use to produce, because you use the farm tools to ensure that all of the crop you want to produce, you do them in the right way, and so that you can have a good harvest, right? So the harvest here is the end result, and this is what you are going to sell, and it qualifies to be your revenue, right? Then the farm investment here, we have 2 farm investment. The first one is the farm investment from third parties. The farm investment from third parties here is treated as loan, because a third party give you money and it's a liability to you. They give you money to invest in farm. So at the end of a particular interval, maybe monthly, maybe quarterly, maybe annually, depending on the kind of agreement you have, they are expecting an ROI from you. That is that is the interest you give to them, and that is the returns for giving you money to invest, right? So in that case, you are going to treat that as a loan, and you also take note of the principal and interest accordingly, right? Then the other hand, you can have a farm investment to third parties. So what this means basically is that you also have the money, you also give to third party to invest in them, and they pay you an ROI at the end of a period. So to you are going to treat this as a normal investment, and you also account for the investment and ROI accordingly, the normal way. So these are all the key activities you are going to have in this industry. These are just the activities, right? So, and the kind of treatment you give to them, right? So basically, now the next thing now is what are these activities and how do you post them on QuickBooks? So like I said earlier, this applies to whatever software you find yourself using, but you're just trying to be specific here to make use of QuickBooks, right? So before I go ahead, I would like us to ask questions. So I need to be sure that we are on the same page. So come up with a question from what we have discussed so far. So if you have any questions, just ask those questions before I proceed. Are we there? Guys, can we ask questions? Or we are all good? Can I proceed? Okay. Proceed. No question yet. Proceed. Okay, great. So everyone says I should proceed. Yeah. So the next thing now is we now need to look at how do we treat all of these transactions on QuickBooks, right? So the first one is the sales of harvested crops. So like I said earlier, under the crop production, we have incurred a whole lot of costs in getting the stuff ready. So it's just like your production costs. That is looking at the normal manufacturing outfits. So all of those costs you incur in getting the stuff ready, the weeding, the tilling of the land, the getting of the seed, the watering, and all of that. These are your cost of production, and that's why it's part of your cost of sale, right? So all those costs you incur, they are your cost of, because these are what you use in producing that crop, tilling the land, and all of that, right? So for your sales of harvested crops, or if it is the livestock breed, that is the livestock you keep for for you to resell, right? So by the time you sell them, you are either going to use the sales invoice or the sales receipt to post it on your QB. You use the sales invoice if you sell it on credit, or the person you sold it to paid part and pay the balance later. And use your sales receipt if it's a cash sale, meaning that you harvested the product, you took it to the market and they buy immediately. You sold your chicken or your cattle immediately and they pay you, right? Then two, when you have a farm investment to third parties. So when there's farm investment to third parties, so it means that you paid third party to invest in the farm and you get some ROI and your sum invested sometimes in the future. So when farm investment to third party, either use your write checks or the journal entry. That is when you just invested. So when you use your write checks, you'll have selected the bank account where the money came out from, and it's under the account you'll have selected that investment account. So you'll have set it up under your chart, yeah, as the investment account, right? Or you quickly use your journal entry by just debiting the investment and crediting your bank directly, yeah. Then the third one, for the farm investment from third parties, this one's is a liability to you. Somebody gave you money to invest on their behalf, and in this case, you either use your make deposit or journal entry. So you use make deposit to receive the money. So like I said, that you only use make deposit for any inflow that comes into your bank account which is not from a customer. All right, like if somebody paid you an interest into your bank, somebody paid you ROI. All of this money is actually not from the customer, from your business, from your ordinary course of business, right? So that is what you use the make deposit to post, right? Ordinarily, if the money is from a customer, you will have used your receipt payment or your sales receipt to post that, yeah? So for farm investment from third parties, you use your make deposit or your journal entry, yeah, to record that. Then from the receipt of your ROI, so you use your sales receipt. to record that your ROI, you receive them most of the time on cash basis. And if you also receive on accrual basis, you first of all use your sales invoice and use your receive payment later, right? Then for the purchase of livestock breed for sale, that you just bought some new set of livestock which you want to resell. So this is you are going to use your enter bills. That is if it is a cash credit purchase, and right check if it's a cash purchase. So you just bought them. So for resell, so it means it's going to be part of your inventory, just like you buying your normal item as an inventory, right? Then the payment for livestock feeds. So all these feeds too is part of the cost of that particular livestock, because that is what they eat for growth. So it's going to form part of the cost of that particular livestock. That is for those ones you sell to reproduce. So it's going to be form part of their cost, the cost you spend on feeding them, right? So you're also going to use your enter bills or write checks to post that. If it's a credit purchase, you use your enter bills. If it's a card purchase, you use your write checks. Then for the payment of principal or interest, so for those farm investment from third parties, if you pay them their principal or interest, you just treat it the normal way. Either use your enter bills or write checks to post that, right? Then when you also purchase your livestock for production, you also use your enter bills and or write checks to post that. Then for payment for crop production, that is all your cost of production, that is all the money you paid for producing a particular crop, you also use your enter bills or write checks to do that. Then your income from farm setup, farm advisory, or farm management, all these ones are the service part. So you are in possession of a particular farm from somebody, you set up a farm for somebody, you did a farm advisory for somebody, then the money you get here as a commission is an income to you. So you either use also a sales invoice or sales receipt to post that. So if it's on credit basis, you use a sales invoice, and if it's on cash basis, you use your sales receipt. So these are all the activities, and these are all the transaction form you use to post them on QuickBooks. Right. Now, there's something you need to know, that for all of this stuff you buy and sell, we talked about the inventory here. So let's take it one after the other. Now, for the livestock you buy to keep for reproduction, right? We said you use the enter bills to post them, right? So the first thing you need to ensure here is that you have already structured your chart of account. That's what the first thing I used to tell you, that the chart of account is what's going to portray the kind of industry in terms of the terminologies you are going to find there, because this is the list of accounts that determines the way your report looks like, right? So you need to first of all structure your chart of accounts to suit the terminologies in that particular industry. And I told you earlier that for whatever industry you find yourself in, structuring the chart of accounts, there are some 4 key accounts you need to take note of. The first one is the income account, because what terminologies you are going to find on the income account for a construction company is quite different from what you find on the agricultural company. So what you need to do is to first of all ensure you structure the chart of account in line with that particular industry, right? Or specifically to that company in reference to the industry, yeah? So that's the first thing you need to do for the income. Then the next thing is also for your cost of sale, right? The cost of sale is also for an agricultural company is also going to be different for a construction company, because this is the cost you incur for you to make a sale, right? Another thing also is the fixed asset. You also need to take note of that. Like an agricultural company now, your fixed asset, you call them farmhouse, pens, machinery, vehicles, and all of that. And this livestock also, the one you keep for reproduction, is also forms part of your fixed asset. So you need to first of all structure your chart of account to meet up with those stuff first before you go ahead and process all of your transactions, right? So these are a couple of things you need to take note of before you now start posting your transactions, right? So to do that, you know what you do? You go to your company, then you go to your chart of account. So we have discussed about this a couple of times. So you just come to account. Like for instance now, there's an agriculture company. What you are going to see under the income is going to be, for example, sales, harvest of crops. That is an income head. So it's quite different from what you see from a construction company. For a construction company, you see maybe sales of building, right? Or you see sales of flats, right? So it's quite different. So that's why you need to structure your chart to suit the uniqueness in that particular industry. Yeah. So also in this kind of industry, you can also see sales of livestock, right? So under the livestock, you can now break it down. You can have sales of cattle, sales of fowl, depending on how many livestock you have. So these are a couple of things you need to do before you now go ahead to do your setup and all of that. And you know that for every of your sales account, they need to have, that is for every of your income account, most especially the income from your ordinary cost of business, they need to have a corresponding cost of sale. Very important, right? So that is why you need to structure it for each of those industries separately, right? So for example, now here you can also see maybe your income from farm advisory. You can also see your ROI from farm investment. You can see your income from farm setup. So these are all your income source, which you need to first of all set up first before now going ahead to process your transaction. So let me try to set up one or two stuff. And for the end product as well that you sell, probably you have a poultry, you sell eggs. So this eggs to sales of eggs also an income source, right? So just come here to say new. So we have done this almost on all of the discussions we had here. So your account type is going to be an income, and you say continue, and your account name is going to be sales from harvest of crops. All right, so we can just say save and new. So under this, you can now still bring different breakdowns to say maybe sales harvest of crop, you sold maize. So maybe part of the crop you harvest, you have maize, you sell it. So it's going to be a sub to the so it's going to be a sub to your sales of harvest of crop. Yeah. So you just save and new. Also, maybe on this you also have sales. You also sell your banana, right? So it's also going to be a sub on this. So it's pretty simple, just for you to know what are those income streams and just set them up. So if the income stream is quite very large, so you set up different subs under that main account, right? And also you can also have say sales of livestock. So this might be a main account. So under that you can have sales of maybe fowls. Alright, which is going to be a sub on the sales of livestock here. So you can save and new. So you can also have maybe sales maybe cattle. So which is also going to be a sub under the livestock, right? So like I said, just need to know what are those income streams. So that's what will determine how you set up the parent and the sub account here. So for each of these stuff as well, you also need to have their corresponding cost of sale, right? You have the corresponding cost of sale. You can have COS, that is your cost of sales, COS alright, so this can be a main account. So under the crop harvest, you can now have the tillage as a sub, the in-ground and all of that as a sub to that main account, right? And also, for those items that qualifies to be an inventory, you need to set them up as an inventory too, right? For example, you have the livestock animals you buy for resale. That qualifies to be an inventory. So you set it up as an inventory. For instance, we have, let's say, eggs that is produced from the fowl. So you just say inventory egg. All right. So which is going to be a sub account under inventory as a whole. So you change the account type here to be other current assets. So it's going to be a sub account under inventory asset as a whole. Can you see that? So you save a new. I can also have, so what this account will be showing at every point in time is the balance you have for each of those items in stock, because this is also a part of, it's also an inventory item because you keep stock of them. All right. So you can have an inventory of cattle. So the cattle you have here are those ones you buy to resell. So not the ones you buy to keep for reproduction. So you need to know the difference, right? Are we good? So that you also set up your inventory. Then for those ones you buy to keep for reproduction, so you're going to set them up as a fixed asset with their respective accumulated depreciation account, because it qualifies to be a non-current asset, right? So you just say fixed assets. So it can be cattle. So you should know that these ones are the ones you buy for reproduction purpose, right? So this is going to be a sub under your PPE, right? It might not be a sub on any, it might be a main account. So you just save a new. Then you have your cost. So cost will now be a sub under the cattle as a fixed asset. You save a new. Then you also have your accumulated depreciation. So you save and close, right? So that is how you do for all of those stuff you keep for reproduction, right? Now, there's something you need to note, that now after you have structured your chart, for those items that qualifies to be an inventory, right? And you know that is something you buy to resell, maybe egg, maybe fowl. As you know that the intention is that you buy to resell, you set them up as an inventory. So having set up the chart, the next thing you need to do is to also set them up as an inventory item on the system, right? For example, you sell egg, so you just come to list, then you come to item. Just the normal way you set up your right? So just the normal way you set up the item you buy and sell. So you just come to item, then you say new, right? So the type is going to be an inventory part. So you put the item name, maybe egg, you put your description, the purchase, and it also pops up here. Then you select your cost of sales account. So you'll have selected the cost of, that is when you sell this egg, the cost. That is the cost of the food and all of that, right? So everything comes here. And that, which is the cost of production, that is the cost you spend in producing that egg, which comprises of the cost of feeding that fowl. So these are part of the cost of production, because without feeding the fowl, they can't lay those eggs, right? So you also link it to the cost of sales account. You'll have set that up. Then you link that with the income account. That might be the sales of eggs you have created earlier, right? Then you also come to the inventory account here, which is going to be your inventory eggs, right? Which means that this account is going to keep track of the stock of egg you have at any point in time. After you might have, after the fowl might have laid new ones, and you might have also sold some out to people, right? So when you are done, you click OK. Now, you have your unit of measurement here. Your unit of measurement here will be crate, depending on what you need to use in selling. So if you sell in pieces, your unit of measurement here will be pieces. While if you sell in crates, your unit of measurement here will be crate, which means that the cost price here is going to be the cost per crate, and the selling price is going to be your selling price per crate as well. So the unit of measure determines what the selling price as well as the cost price will be. All right. So when you are done, you just go ahead and click OK. Right. So at the point where you are setting this up, if you have any opening balance for this particular item, so you just bring them in here, the quantity on hand, then multiply by the cost, it gives you the total value. Then you put it as of what date are you bringing in this balance, right? So in summary, all those items that qualifies to be an inventory, you set them up one after the other. The egg, you set it up. If you sell it, the fowl, if the intention is to buy to resell, you also set it up. The livestock, if you have your cattle and the likes, the intention is to resell, you also set them up as an inventory item. All right, so that's the point. Now, so that is one part. Then on the other part, if you have some items that you have to take time to produce, for example, for those ones like for the fowls, for example, for the fowls now, they don't just start laying eggs immediately you buy them, right? So the fowl itself is is not an inventory to you. If the intention is not to resell, the intention is that you want them to be reproducing eggs. So the fowl itself is going to be a non-current asset, that's a fixed asset. While what comes out of the fowl, the egg, is your inventory. So at the point when you start feeding those fowls and all of that, or the cost of this feeding is going to form part of your cost of production, right? Because all of these costs will go to that account as a work in progress, pending the time this guy will start laying those eggs. So as soon as they lay this egg, you have to transfer it from that account down to the inventory account. That is what you use to value what is the cost per each of these items for the egg. If you can remember, in the construction side, when we discuss about the capital work in progress, say for example you have a building, the building does not just become an inventory in a day, right? It's a capital work in progress for some time, because it takes you time before you do the whole construction and all of that, and it's until when it's available for usage for people to start living in there and to also come to pay rent and all of that, that is when it becomes an inventory. So the same thing is applicable here. So pending the time they start producing that finished product, they become a capital work in progress till when they start the production. So as soon as you start the production, the total value is what you use in measuring the cost per unit of that item. Alright? Because in real time, you really don't have any cost of sale again, because you have already incurred a whole lot of cost already, which is a capital work in progress. Right? So for those ones which the intention is for you to resell, right? No, the ones the intention is for you to resell, immediately you buy them, they are going to be an inventory straight up, because you have the intention they are just buying to resell, right? But those ones the intention you buy is for them to reproduce, they become your non-current asset immediately, right? So like I said earlier, so the intention is what determines the kind of treatment you give to them. So you will have specified that from your chart by differentiating between your inventory and the non-current asset. Yeah. Now, for the income part, so like I said earlier, when you start selling to these guys, you use your sales invoice, right? You sell in particular, maybe you sell the egg, the crop you have spent a whole lot of money on. Now it's time for harvest. You start selling the harvest. You use your sales invoice to do that. If it's a credit sale, so you just easily come to your sale, just the normal way you raise an invoice that we have discussed earlier. You specify the customer name, then you select the item. What are they selling? So you'll have set up the crop as an item here. So for instance, if you're selling egg, you'll have set it up and you just select that here. Specify the description, the amount, and you save. Alright? So that is one way. So after raising the invoice, when they now pay, either part or in full, you go ahead and use your receive payment. This is your receive payment here. Or you probably click on customers, then receive payment. That is another way. Yeah. So so that is for when you sell the product, right? On the other hand, if it is for a farm setup, that is the service part, or the farm management, or the farm advisory, this one is very straightforward. You know the service they are paying you for, and you know the exact amount. So you'll have set up that service too. So when you come to list here, item list, so under the item you say new, then the type is going to be a service, because it's not a physical product. So the farm advisory, the farm setup, the farm management is actually a service you render, right? So you just select the item here. It's going to be, let's say, farm advisory. Then you select the income account straight up. That will be your farm advisory income account. So when you are issuing your invoice, you'll be able to see it there, and you just specify and put the amount and save, right? So the same process is applicable. If it's a credit sale, after issuing the invoice, you just come back to use your receive payment to receive either part or full payment on that invoice, right? Then for the investment part, when you also receive your ROI, you also use your sales receipt to post the ROI. So you'll have created and set up the ROI as an item as well. It's going to be a service too. Then you'll have linked it to the ROI, which is also an income account. So you'll just specify that there, and you put in your figures, right? Then on the other hand, for those farm investment to third parties, right? For the farm investment to third parties, by the time you receive the money, so you use your bank deposit to bring in the money, or use your journal. So you just say make deposit. So you specify what account they paid into. Then receive from is optional. Then under the account, you specify the liability account, which is the loan account, right? So you specify that, then you put your memo and you save. So by the time you start paying back the ROI, the interest as well as the principal, for the interest, you can easily use your journal by debiting the interest expense and crediting bank. And for the principal, you just debit this loan account and credit your bank. All right. So just the normal way you treat your loans, and just the normal way you treat your loans. So on the other hand, for those ones you pay out to people, the ones we give out to the ones you also give out to people, then when you give out that money, you also use your write checks. So you'll have created an investment account under your chart. So you just come to vendors and just say, you come to your banking and just say write checks, right? Then you select the bank where you are writing the check from, then or where you are paying out from. Then the account here is going to be the investment account, right? So by the time they now start paying back, when you receive the ROI, you'll have used the sales receipt to do that. And when you receive this investment money back, you just use your journal by debiting your bank, because the money came into the bank, and credit the investment. All right. So the key thing for whatsoever industry you find yourself, the first thing is just for you to list out the area of uniqueness, and now attach to it the way each of these items is going to be treated, right? So because all of this stuff here is a general stuff, you can use it for any purpose. So your own is just to drill it down to whatever industry, and so you'll be able to define the kind of treatment. When you know the kind of treatment for the accounting terms, so you'll be able to know what transaction form are you going to use to post it right here. All right. So basically, that is for this particular industry, just for you to know what part, right? All of those activities we mentioned earlier, if you are able to highlight them out, so you'll be able to know which kind of treatment you are going to give it here. So I would like us to ask questions for what we have been discussing so far. So I'd like us to ask questions. Our time is really fast spent. This is past 10, and I believe everybody is going to work tomorrow, and we should have been preparing by now. So I really want to be conscious with the time, coupled with the fact that we are also rounding up. So can we ask questions from what we have been discussing so far, please? Okay, the first question here: how do we recognize the spoiled farm produce? So the first thing we need to establish here is to know that this spoiled farm produce, is it the one we hold for reselling, or the one we hold for to use for reproduction? If it is the one we use for reproduction, the spoiled farm produce is just going to be it's going to be treated as an impairment, right? We all know what an impairment is, of just the reduction in the value of what is it called, a non-current asset, such that the non-current asset will not be able to generate enough cash flow as it used to be before, due to certain reasons, right? So if we have a farm produce, so if the kind of farm stuff is the one we hold, so I want to use this to answer. I want to break it down in two ways. So for example, you have a cattle now, and probably the cattle fell sick, and as a result of that sickness, the vet told us that this cattle will not be able to it's going to take time. So probably the cattle will be able to, and as an example, the cattle will not be able to produce, let's say produce the kid cattle twice a year. So as a result of the sickness, maybe you will only be able to produce once. That is an impairment to that cattle. So for those ones, the intention is to reproduce. So when there's a reduction to the value, you treat it as an impairment. So in that case, you just debit your impairment expense and credit the value of that asset. On the other hand, that is using your journal entry. On the other hand, if it is those ones you buy and resell, right? For example, the maize, the eggs, and the like. So the assumption here is that by the time you are done with the harvest, you have brought them in as an inventory item, right? So by the time you are done with the harvest, when, let's say we have 100 maize, and you discover that 10 is spoiled and you just have 90 left, so it means that the inventory on hand has reduced, right? So you just treat it as a wastage. So you just come here under your vendor, you come to inventory activities, and you come to adjust quantity / value on hand, right? So your adjustment account here is going to be loss on farm produce. It's going to be an expense account. You call it loss on farm produce. So you'll have selected that here, right? So you select the item, which is let's say this bottle is that maize, right? And the quantity on hand there is 100. So you change your new quantity here to 90, and the quantity difference will be 10. So immediately you save, it's going to transfer that value out of that inventory, because it's now spoiled, to your expense as an additional expenses, and the quantity on hand will also reduce from 100 to 90. So like I said earlier, for farm produce, you need to look at the context. That is it. If it's the one you use for reproduction, you treat it as an impairment, and if it is the one you buy and resell, that is your normal inventory. That is when you treat them as the normal inventory loss, and in this case we just refer to it as loss on farm produce, right? Then another question here: can you please re-explain the posting to the two legs using enter? What posting exactly? What posting? So I will know how to go about it. Then the next one: how do we depreciate the livestock that are classified as PPE, and when does depreciation start, given that the livestock will not start production immediately, right? So For this depreciation, you use okay, okay. I'm going to answer that question, and I'm going to give you an hint now, right? So for I want to attend to this question. How do you depreciate the livestock that are classified as PPE? Now, for depreciation start when this particular livestock has been put to use, right? Then even for a fact they don't start production immediately, but immediately you know that the production is going to happen. It's probable that they are going to produce, and that is the economic benefit from it, right? So in that case, you are going to start depreciation immediately, and it's going to be based on the useful life. That is, how many years will they use? How many years will this particular livestock use, right? Based on experience, and that's what you use in calculating the depreciation. So to post the depreciation, you use your journal entry. You just debit the depreciation expense and credit the accumulated depreciation of that livestock which you have created on your chart, right? So does Quickbook recognize the nature of account heads as debit and credit entries by default? What I mean is that, how do you know you have debited an entry and credited another? Now let me give you an hint. Anytime you are dealing with a customer related transaction, maybe a sales invoice for example, so you know that your account receivable is already taking the debit, right? So any other account you select there is taking the credit. So the QuickBooks does not show you, except if you use a journal. You know, in journal you specify the debit and credit yourself. But for the other transaction forms, what you need to know is that if it's a customer related transaction, the debit is already constant, which is, if it's a sales invoice, the debit is your receivable, and you now know that the credit now is your revenue. That is on one hand. If it's, you are receiving payment, you already know that the debit is the bank because you are receiving, and the credit here is your receivable, right? That is for your customer related transaction. If it's vendor related transaction, let's say you use write checks. You write checks for your expenses. Then you know on your write checks, immediately you select the bank is taking the credit because it's an outflow of money, right? And you know that any account you select there, maybe an expense account, maybe a non-current asset account, is already taking the debit, right? On the other hand, if you use an enter bill, you know enter bill is your credit purchases. So for an enter bill, you already know that the account payable is constant there, and the account payable is taking your credit already. So you should know that the debit is either going to be the expense account or any account you select on your enter bill. If it's an expense account, it takes the debit. If it's an asset account, it's the one taking the debit. I don't know if that answers the question. So have I been able to answer your questions? Can you come up with more questions? For those who have not been able to answer, can you tell me what area I have not been able to answer? So we have a very limited time. Do we have more questions? I'm still expecting more questions. Okay, I think we don't have any other questions. So subsequently, so if you have any issues, so you can easily reach out to me via just a private chat. I'm going to attend to that immediately, right? So for, like I said earlier, so you should be on the lookout. So we always hold webinars like this every month. So be on the lookout for our monthly webinars and all of that. So at the end of this class now, probably I would like us to, okay, I'll send a message to the group. I'm going to drop the tutorial note as well as the tutorial note and the video recording. So I'm going to drop it to the group, and so this brings this particular course to an end, right? So I want to really appreciate our time for sparing our time to at least come on board to join and to gain one or two stuff. So for every one of us that will still have some question regarding any industry at all, there are still a whole lot of industries, right? So probably in our subsequent courses, subsequent webinars, we'll have to factor in those other industries we have not been able to touch. So we just had to talk about the key ones, which we know that we might eventually find ourselves there, and from time to time, right? So for those other ones, we might eventually have to also talk about those ones in our subsequent webinar. So we couldn't take all of them here because of the time constraint and stuff, right? So I really appreciate our time for spending our time to come on board to join the lectures and stuff. So this brings the course to an end. So like I said earlier, we'll be issuing out the certificate of participation. So what I want us to do is that I want everybody on the group to send me their full name or the name you want to be on the certificate, their full name as well as their email address. So I'm going to forward everything to your email. We'll send it, the certificate is in soft copy, so we'll send that to everybody's email. So I want you to send me your full name with the name you want to appear on the certificate, so that we can put that on the certificate. So thank you for joining. Our time has been fast spent, so we need to prepare for work. For those of us going to work tomorrow, this is almost 10:30. So like I said, if you have issues about some of those industries we have discussed, so you can easily reach out to me, and I'm going to attend to it immediately. Whatsoever industry we have, even the ones we have not discussed. So if you find yourself working in any industry and you feel that you need to understand the uniqueness in those industries and how to treat some transactions, so you can easily reach out to me, and I'm going to attend to that 100%. So I thank you for your time, and I really appreciate that. So I'm going to drop the lecture note as well as the video tutorial download link. I'm going to send that to the group. And for those of us that we are still finding it difficult one way or the other to download the software on our system, so for whatever issue you have, you can reach out to me so we can easily resolve that. Alright, so just stay tuned. And for those that were unable to join the webinar due to one reason or the other, so you still stay tuned for some of our webinars that will be coming up in August. So I really appreciate everybody's time to join the class, right? So it has been a great one so far, even for the fact that the turnout was low, but at least we have been able to share knowledge and interact with each other for the past 4 weekends now. So I really appreciate the time, and I'm going to send the stuff to the group in the next few minutes. So thank you everyone.